Hello and welcome to Commodity Champions. I'm Manisha Gupta and today's show is going live from India International Bullion Summit. We are discussing gold here, which has seen quite a movement in this week in sense of prices. We are off nearly 2% from the highs, but we still are 2% up when it comes to 2019 as a year until now. Well, there are various global factors that we're keeping an eye on, starting right from Brexit to the US and China trade talks, the kind of demand that gold has seen in physical and the paper market. And then, of course, it also has been about the US dollar movement. All of those things are keeping the gold prices choppy. But even with that, the expectation is that these are accumulating levels. There are more bullish voices on gold than ever before that we've seen in the last 4 or 5 years. But another issue that the industry is really facing is about financing. Remember, we have been talking about that for some time now on how after the recent frauds in the diamond and the jewelry area, the credit finance or the trade finance for the industry has gone down. Joining me now on this show is Gabriel Nasser from TGS to talk further about that. Gabriel, hi, thank you so much for joining us. What is it that India really needs to learn right now? I mean, the kind of credit crunch or the money availability that Indian jewelry sector is facing because of, the frauds or things that have gone wrong on. How would you see India in that light?
I think banks and financial institutions are shying away from the industry. At the same time, you have jewelers who really are in desperate need for cash to grow their business or at least maintain it. And what we do is we want to advocate bringing in all the players via a platform that provides visibility and traceability in a secure and confident fashion of the inventory that they're carrying. And that way we can restore some of the trust and enable all these players to work together towards prosperity.
Gabriel, what is it that India can really learn from the global markets here on how it really works in Dubai, etc.? Because this is a sector which is not perhaps priority right now, but with the kind of exports, at least what India does in sense of gems and jewelry, does need that kind of finance to ensure margins, competitiveness, and the growth of industry.
So what happened in Dubai was you have the government and an independent logistics provider, the bank, as well as a platform like ours, who came together for the sole purpose of providing visibility into the jewelry inventory that each jeweler carries. And this in turn has helped banks provide lending more confidently, even on a gold for gold basis. And this has sort of kick-started an industry that has been on the decline since 2008, when a lot of the capital has dried up and a lot of banks have pulled from that. So the lesson here for India is to replicate that model. All the players are in place. There doesn't need to be heavy regulation involved. All we're doing is providing a platform whereby we can track electronically and securely movable assets like the jewelry so that everybody can have the confidence to lend again.
So how would you look at the Indian markets? Because there is more unorganized than organized. I mean, I understand after demonetization, we have seen a shift in the Indian space as well. But, to account for every piece, to ensure that what is on paper is actually is in sense of inventory as well. How does India reach there?
Well, it reaches there by actually doing. And what I mean by that is today we can act and have open discussions with even associations like the IBJA, who have a lot of members. These members are KYC'd, and they are creditworthy customers, for me to understand correctly. So bringing them together, putting in a platform that provides that visibility, and then convincing the banks and having the backing of a logistics company to say that, we are ready to ensure and underwrite that the inventory is there, and to do that on a daily basis in a very confident manner. When you do that, then you provide a level playing field for all the jewelers, whether it's the organized guys or the smaller jewelers who are aspiring to become, have a place in the market.
So until the time that India continues to face a short-term money crunch, perhaps, where there is, more stronger, stringent rules coming in from banks, and we, of course, talk about self-regulation here as well. What about the international finance that is available to the sector? Is that a growing trend, really?
It is a growing trend, and I think this kind of, excuse me, this kind of approach helps a lot of these financiers, who are global players actually, be able to finance the industry. I gave examples of many Indian jewelers whom we facilitate financing for in Dubai. Why can't we do the same in India? They have a big presence. They have the trust of the government and other players. Why not do that? The second part I want to touch on is that this is not a product restricted to banks. You have NBFCs, which are non-banking financial companies, that have a big role to play, whether they provide loans, for which we can provide an asset-backed approach to them, or where they do a gold loan basis. And all these players are actually invited and encouraged to sort of look at the industry again with a keen eye.
Also, what is your sense on the kind of Indian demand or interest that we are seeing in gold, especially for 2019? It really seems to be like a portfolio diversifier right now, the way the global markets are. Almost everybody is advocating buy gold. Do you see that changing futures for gold market as an industry? Do you see much more finance, much more interest then come in?
For sure. And the reason I say that is because you have a big shift in consumer spending and confidence. And when that happens, it introduces unpredictability. And the way you can tame this kind of unpredictability is if you provide a consistent platform for the jewelers to fall back on in hard times or in great times when they're looking to grow. And so this is the way I see it.
How do you see India grow from here on? Because we're talking about gold, gold spot exchange, we're talking about bullion banks, we're talking about a gold regulator. There are a lot of changes which are coming in sense of policy here. What do you think India is really trying to replicate here? Because we're trying to see what China is doing, what a smaller place like Turkey, etc. is doing. What do you think will work for India better? And how will you see the businesses change once we see these policies come in?
For a country like India and the size of the market, it's very important to do several things at once, because I don't believe in a one-size-fits-all approach. And by providing some visibility, we should enable and encourage testing, experimentation, because if we wait for regulation to come forward, it's going to take a painfully long time. And the risk here is that India gets left behind. I mean, today I believe if someone like Dubai is doing what we're talking about, then India is maybe 5 years back. We don't want to set us back 15 more years. No, we want to quickly act, confidently and slowly, experimenting and trying different formulas. Because I believe all these things will come together, even provide data that will help feed positive regulation and more confident decision-making.
Yeah. So, Gabriel, a final question really. What are those 5 things that you think India really should be pushing for betterment of the industry, for the sector, for gold as an asset class? And do you see all stakeholders actually being part of it?
I always see all stakeholders being part of it, because this is a pie that doesn't belong to one entity or one person. If we're all sharing it, then we have to all contribute to it. I don't know about 5 things, but I can tell you one thing, and a consistent theme I heard throughout the summit today, which is India is very rich in design of jewelry and ornaments. And I think that kind of diversification and that kind of capacity, India should capitalize on, because that's what differentiates it from the rest of the world. You have Indian design proliferating in the Hollywood industry, among younger generations, whether it's in the US or Europe, because they're very exotic and dynamic. And I think this is the kind of answer that India should capitalize on, to sort of move away the conversation from, oh, how do we protect our margins, to more creating quality and value-based pieces that command margin, rather than actually having to fight for it.
Also, I'm just going to squeeze one more question here. Please. And this is about, on how India treats gold until now. We've been fearing the current account deficit increasing here. And then the kind of gold that the population holds here, the way we haven't been able to actually monetize or financialize it, in that direction, where do you see India really heading?
I'm not an economist, so I'm not in a position to speak about the current account deficit, but I can fairly confidently say that we don't know how much gold is out there. That, combined with the shifting sentiment and the ties that India has still with the past and the traditional way of viewing gold, is going to play out in such a way that I don't think anybody is going to predict. But I believe the outside pressure, the international exposure, and a growing class among the Indian population is going to shift that demand and the way it's been viewed. So I think we should rely less on the past and use that very gently as a predictor of the future.
All right, Gabriel, has been a pleasure talking to you. Thank you so much
Likewise.
for taking time out for us.
Thank
All right, but with that, we'll go for a very short break. When we come back, we will continue this conversation with more experts on the other side.